become more urgent. And here at Bloomberg, we want to be part of these discussions and, where we can, lead them. As journalists who are part of one of the world's largest newsrooms, we believe it's critical. And we've been covering news around equality for years. Issues around pay disparity, childcare, workplace diversity, and the digital divide. But there's no doubt that 2020 was a turning point. The events of that summer, especially George Floyd, made us and many other people rethink the way we cover equality. And we decided it was time to broaden our coverage. Today, we have the Bloomberg Equality Vertical. That's a multi-platform global initiative, and it's a vital part of our newsroom, led by Rax Saluja. We have a dedicated team covering ESG, and I think it's interesting that the E part of ESG receives a lot of attention, but the S and the G parts are hugely important too. The racial audits, transparency, diversity on boards, the pay gap, sexual harassment, and mandatory arbitration. I think all these things are becoming integral to investing strategy, important to people about where they make money, as well as to society as a whole. Our job is to continue to report on these efforts and, where possible, hold the companies who are either doing this or claiming they're doing this, hold them accountable. But that is just the beginning. We're building up diversity databases on many of the world's biggest companies. We have the Bloomberg Gender Equality Index now in its 7th reporting cycle. We have the New Voices Initiative, which is to train up diverse voices to appear on all media, not just Bloomberg TV and QuickTake, though obviously I think that's preferable. So there is a lot going on, and this Equality Summit, I hope, will reflect that and be part of that. So I'm excited to see what happens. And now I'm going to hand over to our Deputy New York Bureau Chief, Shartia Brantley. Thank you.
Thanks, John. Hi, everyone. Welcome to day 2 of the Bloomberg Equality Summit. We are thrilled you can join us. Our theme for this event is Modern Leaders and Allies. As the next generation of employees enters the workplace, bringing their own voices and views to issues around workplace equality, we are convening global leaders on the front lines of education, wealth, technology, government, and business to talk about the next phase of oversight and accountability. Who are the agitators charting a new and faster course to achieve equity and change across business and society? What tough questions are necessary to create sustainable change and a pandemic-led recovery? We'll continue to explore these and other pressing issues in our program today. Before we get started, a couple of announcements. I would like to acknowledge our presenting sponsors, Boston Consulting Group and P&G. Our supporting sponsor, RBC Capital Markets, and our community partner, United Negro College Fund. If you experience any issues with audio or video quality, try to refresh your browser or use the chat box in the bottom right corner of your screen for support. You will also be able to submit questions during the interviews. We hope you do engage with us. While we're probably not going to get to all of you, we'll try our best. To submit a question, please click open the white tab on the right-hand side of the video window. If you note your name and geographical location, we'll give you a shout out. For today's event, we have partnered with Thyssen, an audio-to-text platform that is transcribing today's discussions in real time, making the event more accessible. You can access Thyssen for the real-time transcription via the link in the session description. Please engage with us on social media using #BloombergEquality and engage with other attendees in the event chat in the bottom right corner of your screen. And now, let's get started with our first session. Please welcome my colleague, Scarlett Fu, anchor for Bloomberg Quick Take. Scarlett.
Thank you so much for joining us this morning. We know that anti-Asian violence has risen since the start of the pandemic, but the U.S. government has actually now corrected its original data, and The fact of the matter is, it's a lot worse than we originally thought. According to the FBI this week, anti-Asian hate crimes jumped more than 73% last year. That's a disproportionate uptick compared to hate crimes in general, which rose 13% in 2020. So our discussion today focuses on the corporate response to this and how the newly created Asian American Foundation will work alongside the business community to combat this rise in violence. So to that end, I want to welcome our esteemed panelists. Joining us from Houston is Sonal Shah. She is founding president of the Asian American Foundation, as well is Jerry Yang from the Bay Area. You know him as the co-founder of Yahoo. He is also founder of Ame Cloud Ventures. Thank you guys so much for getting up early and joining us on this important conversation. Sonal, let me start with you because you worked in the federal government, you've worked in the nonprofit world, you worked at Goldman Sachs. So you've really seen the gamut of different organizations. You started the Asian American Foundation earlier this year. How has the escalation of violence against Asian Americans sharpened this group's mission?
Well, Scarlett, first of all, thank you for hosting this conversation. And this started with Jonathan Greenblatt from ADL coming to actually our board, and Jerry can talk about this, saying we're seeing an uptick in violence against Asian Americans, and we really, what are you all going to do about it? So when we started working on the foundation and we were setting it up, we were doing research, and then we saw the uptick in violence continue to increase, and the numbers are showing it with a 73% increase. And we realized that we couldn't just wait for a strategy. We actually had to launch and really get out there and talk about the violence that was happening. That's why right after Atlanta, we decided that we were going to get launched, and we launched the Asian American Foundation in May with 3 presidents, and obviously a huge interest from the business community, individuals and foundations to really make sure that we are paying attention to what's happening in the Asian American community, to what's happening to Asian Americans. Too often the violence is frankly underreported, and we don't actually talk about it, to make sure we're holding not only government and businesses and community responsible, but ourselves to say, are we making sure we're standing up where we need to and creating a foundation that is looking at belonging and prosperity for AAPIs, 23 million AAPIs in this country, and ensuring that there's no violence, discrimination, or slander against us. So that is why we exist. That is why we are here. And we want to make sure we're standing up for all 23 million of us.
23 million strong, and in fact, the fastest growing minority group in the U.S. as well. Jerry, what has TAAF found when it comes to corporate investment in this community?
Well, thanks, Scarlett. The TAAF's mission, as Sonal says, is to not only look at the anti-Asian hate that gave us sort of the unity and the solidarity to create TAAF, but also the belonging and the inclusion of Asian Americans. And one of the things that really got us in the very beginning is this idea that if you look at the last 5 years, the amount of giving from foundations and corporations that to Asian Americans in the AAPI community has been less than 1%. And so if you imagine that people generally don't think that AAPI community are underserved, but the reality is that while there are a number of Asian Americans across the United States are doing very well, there's still a vast number that are in poverty, and in fact, the worst social demographics of Asian Americans are doing much worse than the average. So this undergiving gave us the idea of going to corporate America, going to foundations, going to charitable private foundations to really up their giving. And this is part of the giving challenge that TAAF launched in May, which was able to take dollars and resources and in kind from corporate America to be able to devote to Asian American organizations. And the number we were able to raise over the next 5 years is $1.1 billion. This is the number that includes not only direct dollars to organizations like TAAF, but also indirect dollars that company can do inside their own organizations for their DEI work or or to other organizations. So it's an astounding number, but we're just getting started, Scarlett. I think Asian Americans have been traditionally underlooked in the Asian philanthropy landscape, but also in the giving landscape. And this money is just getting people to go to sort of strengthen their Asian American organizations and start to scale. And so it's an interesting time because we're motivated by the anti-Asian hate work, but also really gratified by the unity and solidarity we're seeing.
Yeah, less than 1% from companies, and Sonal, I believe about half of 1% from foundations. So to get foundations and companies to increase their investment, spend more, a lot of what you work on at TAF is education. What do you spend the most time explaining? Is it the history of the AAPI community in the U.S., our diversity of our origin countries, and who do you find needs that education the most? Is it people in the community? Is it people outside the community, the executive branches, or the executive core, the core executives, I should say?
Yeah, we find that government, business, and outside of our own community, other communities need education about the community. There's a lot of misperceptions about our community. So one, as Jerry mentioned, that we are wealthy and that we don't have a dichotomy amongst our communities. So in fact, the highest disparity in income is amongst the Asian American community. Across all communities, the highest disparity is in the Asian American community. Two, recognizing that the AAPI community is American. Too often we have a perception that we're the perpetual foreigners. We're not American. And reminding people that we are American. In fact, Asian Americans have been in the United States since the 1800s, and recognizing that the history of America includes the Asian American community. And the final is that we are over 40 ethnicities, 20 Pacific Islander communities. And while we are a diverse set of communities, even within the AAPIs, we have a lot of commonalities, and that there's a lot to be done. So not to be overlooked and ensure that we're there. So government too often doesn't think about the languages in the Asian American community. When we think about language translation, investments that need to be made, we don't disaggregate information about AAPI. So we put AAPI as a lump sum category. But when you think about who actually is being affected, it's important that we disaggregate that information. And in business and organizations, sometimes we forget, we don't even think about the AAPI populations because, we're like, well, it's 20% of the population in many companies, but we don't even think about it because they're there, but we don't think about what's happening to them, and the fact that AAPIs are not being promoted. Our communities are not being promoted at the rates of other communities. So recognizing that AAPIs are here and that we need to educate people about who we are and what our issues are.
Okay, well, right now, as I just mentioned, the FBI has given us new data that show that the incidents of anti-Asian hate have actually been a lot larger than what we had known up until this point. There are definitely fewer headlines, but there's still plenty of incidents. And I know that TAF is involved in the collection of data and making sure that we are keeping track of what's happening. We have a question from the audience here, and so I'll direct it to you. Based on all the work that TAF is doing and Stop AAPI Hate, which is one of your grantees, is working on, do you have any information on the current causes of specific violence against the Asian American community?
So the particular violence against the Asian American community right now is coronavirus. And the fact that, our past president talked a lot about Kung Fu virus, all of that didn't help that it started to target a community that has been living in the United States, working in the United States, and talking about that. And that has increased violence amongst the Asian Americans, not just the Chinese American community, the Filipino American community, the Korean American communities, but across the board, it's affected our communities. So the largest amount of violence has been that. The second part is the anti-China rhetoric and recognizing that we may talk about a government, but let's not hold everybody and people accountable to what a government might do, and that is translating to affecting Asian American communities in the United States. So the violence is coming from multiple ends, but we have to be careful about how we say things and what we say, and it affects our children and college students too. It's not just the elderly and in Chinatowns and other places, but it's having an effect in schools, it's having an effect in college campuses, and it's important that we recognize that.
So I mentioned Stop AAPI Hate, which has been tracking the number of incidents of anti-Asian hate. Jerry, we are in a world that reveres data. You are comfortable in that world of data as well. Collecting data on hate crimes we know is paramount, but walk us through how having that data moves the needle, because I look at the world of ESG, the environmental, social, and governance, and climate change, and the financial industry is obsessed with tracking data, with monitoring data, and measuring the data, and there's any number of sources for that information. But all that data, the aggregation of it, the slicing and dicing of it, the analytics it drives, it has somehow replaced action, or it can replace action. I worry that that's what's going to happen here. How do you think about that?
Well, you nailed it. I think getting data is just the beginning, but really translating data into insights and translating insights into action is really where we need to head. And I think the reason that there is a fascination around anti-Asian hate data right now is that there hasn't been any of it before. This is, just something that nobody really tracked in the past. And so one of the work that TAF is trying to do is really build a foundation and a platform for being able to have kind of a longitudinal study over time to be able to understand what is going on. So not only are we partnering and helping funding people like Stop AAPI Hate, which is doing great work. We at TAF also have our own tracking of what's going on social media. So primarily Twitter, but also other sources where we just observe. We're grabbing things off of the internet. And so while you talk about anti-Asian hate crimes from the FBI, these are documented crimes. We also sense sentiment. We also sense incidents, things that don't become crime or not classified as crime. We have just seen that number have gone up. We've gone from sort of like Sonal said, rhetoric and incidents into increasingly more violent and more direct hate actions against Asian Americans. So being able to really first understand that baseline data, whether it's through our Twitter data or through Stop AAPI Hate or through survey data, which have been launched, and then we're also doing commissioning a more foundational study based on the 2020 census with the Pew research. These are things that we're going to need to be able to just understand our community better. Where are things happening? Who's that happening to? Is it within the community? Is it from outside the community? And then being able to take that kind of data, translate into insights, and translate into education initiatives, translate into narrative change, and then of course translate it into anti-Asian hate kinds of actions. For example, the Action Center that Sonal launched last month, where we're working with local community partners, or we're working with local companies, or we're working local governments to be able to respond to any dramatic hate incidents, for example. So being able to translate that data into insights, into action, is really what TAF is focused on.
Okay, so that's the sequence here. So Sonal, I'm going to kick it over to you. Tell us a little bit about the action centers and the specific actions that you have put in place at TAF with some of the companies that you work with.
So the action centers are in 3 cities right now. We're piloting in New York City, in Oakland, and in Chicago. And each of these action centers is focused on collecting data, protection of communities, response where response is needed, and helping people get access to the services that they need. And that's important because, and we're working with local governments there, we're working with local companies in each of these cities, and we're working with local activists or organizations there to make sure that there's a full wraparound service around when an incident happens. But while there's also what happens with incidents, these action centers are also focused on prevention. How do we work with companies? How do we work with government? How do we work with local community organizations to ensure that communities don't have to go through that? So we're not just dealing with incidents as they happen, but addressing them before they happen. So the action centers, we hope to expand these action centers and do it in more cities. But we started with these 3 cities because we knew where the incidences were high, and they continue to be high in each of these cities, and where we know that we have strong partners and we want to learn. So as we learn, we can adapt and expand along the way.
I have a question from the audience, and I'm going to direct it to Jerry. One of the audience members, Jerry, wants to know, in what way should AAPI data be aggregated? Should it be by region? Should it be by country of origin? What would you suggest?
Well, I think the way we look at data, especially on Asian Americans and Pacific Islanders, is really as a inside the United States, looking inside the American community, and the kinds of things that we're really trying to understand is, for example, not only among sort of the well-known ethnic groups of sort of the South Asians or the East Asians. But, if you look at Southeast Asians, there's a large Southeast Asian community, whether it's the Hmongs or the, so the Cambodians or Vietnamese. There is a huge number of Filipino Americans. They're starting to be obviously Asian Americans of different religions, and being able to segment those and understand whether religion plays in a role in sort of our work, which obviously it does. And then really there is a lot of inside the Asian American AAPI understanding and study of where do we all live, what are the social geographic and social demographic data, but it's really, Scarlett, none of this is rocket science. It's really just basic sort of societal and communal understanding of who we are. This is what you probably would do in any community, and so we're just getting started there. And insights are quite telling. We're finding out about what we know about ourselves, and then our interactions with other races. Those are important as well. So we're hoping to be able to talk a lot more about that in the coming months.
It speaks to the fact that there was such little data to begin with, that collecting this data tells so many stories. Sonal, give us some specific examples of companies that are spending money and taking actionable measures beyond paying lip service and saying that we stand beside our AAPI colleagues, we wish them well, we condemn this violence against this community.
Well, I hate to pick on any one particular company because we have so many of them partnering.
Let's highlight.
Let me give you 3 examples. So Bank of America is a great partner with us, and they have made a big commitment to equity. And we are a partner with them in looking at which communities that are being most affected where Bank of America operates, and how can we make sure that communities are being affected there. McKinsey is running an institute on Asian American leadership. As I mentioned, the promotion of Asian Americans in companies is very limited. And so we wanted to make sure we were working with Asian American leaders. So McKinsey is running an institute. They've already put 1,000 leaders through that institute, and they would like to do 10,000 to make sure that we are investing in Asian American leadership. On the tech side, we have companies like Zoom that are working with us and helping our nonprofits get access to accounts, or to be able to understand how they could use Zoom more effectively for the work that they need. So we have many companies that are doing this, but these are just 3 great examples of companies that have really stepped in to really be partners with us.
And I'm glad to hear about Zoom and the tech industry doing that, but it makes sense given that the CEO is Eric Yuan, who is Chinese American. Jerry, you are based out in Silicon Valley. The big tech firms are the leaders, the corporate leaders. They attract the talent. What more do the CEOs and the founders of those firms need to be doing to play a bigger role in promoting AAPI leadership and belonging?
Well, there's a lot we can do here in Silicon Valley. I mean, you think about some of these big tech companies, or even most tech companies, their Asian American population is, in the 20, 30, maybe even 40% are AAPI. And as you both have pointed out, there's this bamboo ceiling. If you're 40% population or API, if you go into sort of the vice presidents or even the C-suite, often, even though with well-known entrepreneurs and CEOs that are Asian American, often those C-suite and the leadership levels are much less than 10%. And to think or say that Asian Americans are the sort of the workhorse labor force out here in Silicon Valley, not represented above sort of the leadership levels, is astounding. And it's so not only are there leadership training opportunity, promotional training, DEI kinds of things that companies can do, but also I think really we've been doing a lot of, just talking and conversation and dialogue with the employee resource groups, ERGs within all these companies, and being able to fund them properly from either inside the company or from other resources, but also really creating an environment where there is discussion. I mean, we were in one company, and I'll give you a quick example, Scar. We were in one company, and they had 9 different ERGs from different parts of cultures and different languages. And the difference between people who are native-born Asian Americans that are doing work versus immigrants, they're very different. And I think people tend to think of us as one sort of monolithic
let's get you back up. There we go.
Group. Yeah, sorry, here we go. One monolithic group, whereas really there are many, many different ethnicities that are being addressed. So I think taking that next level down with ERGs and with companies and creating those dialogues and creating leadership opportunities, that's really where we're opportunities at.
All right, doing the work, in other words. Jerry and Sonal, I really appreciate your joining us this morning, getting up early. Sonal Shah is founding president of TAF. Jerry Yang is founder of Ame Cloud Ventures, and of course, co-founder of Yahoo. I'm going to hand things over now to my colleague, Carol Masser, who will pick it up from here. Carol?
Hi, everyone. I'm Carol Masser of Bloomberg Business Week on Bloomberg Radio and Bloomberg TV. We're going to talk about the agitators that are out there, especially when it comes to talking about ESG in the investment space, but also environmental, social, and governance issues overall. We have a great panel to do so, and let me introduce them. Tariq Fancy, he is founder and CEO of the Rumi Initiative. He's the former chief investment officer for sustainable investing over at BlackRock. We also have Laura Murphy. She is president of her own company. She is a pioneer of the corporate civil rights audit. She has worked with Facebook, Airbnb, and others. And also Barbara Ann Bernard. She was investment banking at Goldman, alternative asset management at Deutsche Bank. She's now founder and CIO, of Windcrest Capital. She began working her career, she was 15, with Sir John Templeton. So we have a great panel to get into this discussion because there's so much going on in the world when it comes to making things better. And we see a lot of investment money flowing into the ESG space. Let me just throw out a quick stat. Global sustainable mutual fund assets hitting a fresh record in the second quarter. So we're now seeing ESG funds with combined assets at $2.3 trillion, the 5th consecutive quarter of growth. This was after a record year last year. Bloomberg has reported that ESG assets may hit $53 trillion by 2025, making up about a third of global assets under management. That's going on. And at the same time, what we're seeing is advocacy groups. We're seeing shareholders, stakeholders increasingly call on corporations to be better, do better, and to measure what they are doing so that they can actually be and do better. So we're asking companies to do civil rights audits. So we're going to get into all of this. Let me start with the ESG side of it first and the investing angle. Are investors being duped by ESG investing? Tariq, you were the chief investment officer of sustainable investing over at BlackRock. Over the summer, you outlined why you now think sustainable investing is a dangerous placebo that harms the public interest. How did you go from being, for lack of a better word, kind of the mouthpiece of sustainable investing at the world's largest asset manager to someone who's pretty critical of it?
Well, so thanks for the opportunity to speak today. And, I would say that I wouldn't cast any aspersions on anyone in this space who believes a lot of the major narratives today. And I would say that because I believed them going into it, right? I drank the Kool-Aid, and I believed that this was a way that we could, effectively drive both social change and better investing outcomes. So it's an alluring win-win. And what I tended to find when I went in there as a trained investor who had not only done ESG, had done investing across the board, at sort of with a hedge fund background, that, ESG is kind of become all things to all people, right? There's an argument that it improves investment returns, that it improves society. And what I found was that it's useful for investing in a few instances. And, there's a kernel of truth, but that, where purpose and profit overlap, but it is being blown into something far larger than it is that doesn't really work across the board. And secondly, it seems to have no clear social impact from what I can tell. And that's quite dangerous, because some of the research I worked on subsequently showed that actually the narratives and messages around ESG, sort of as this magical panacea for climate change and social change, so on, actually just creates a deadly distraction where people are less likely to pay attention to policy and government-led reforms that our experts in society are telling us actually will address those problems.
One quick follow. When you were at BlackRock, did you feel like you were inside and could leverage your role? Did you feel like you had a platform to do so? Were people listening? Was Larry Fink listening?
I think people were listening, and they were trying to sort of do the best in the room that they have. I think the challenge is that not that, a firm like BlackRock can solve all of our problems, and they're not. I think the challenge is that they can't, but they're saying, or they're incentivized to imply that they can. Right. So the answer to climate change is clearly, Nobel Prize winning economists are telling us it has to be policy reform. Starts with a price on carbon that is a systemic reform that, addresses a systemic problem. And that has to be government action. And I think that the economic system is being so seized by a set of narratives that have underlie the system and are almost invisible, that emerged in the 80s that tell us that free markets solve all problems. That even when faced with market failures, 13 years after the financial crisis, we're still sort of hitching our ride to a set of solutions that don't really work. And the problem is the asset management industry is incentivized today. No one wants taxes and regulation, even if that's clearly the solution, right? And climate change is going to cost money. Someone's going to have to pay. And so faced with that reality, there's an incentive to sort of take one hand and hold off taxes and regulation with a set of narratives that say that business will solve these problems all by themselves. Kind of like a sports game where, the athletes say, oh, we don't need referees, we'll self-referee, and good sportsmanship's the answer. And then into the growing social angst that starts to develop because people see nothing getting done on these major problems, then there's an incentive to sell a bunch of products that, for the most part, have no empirical evidence at all that they create any kind of impact or lower emissions, but are lucrative, particularly for financial, for asset managers who are facing fee pressure for, largely increasingly commoditized products.
Barbara, I want you to come in on this, because over the summer we did see the European market for sustainable investing contracted by $2 trillion. There was kind of a rethink, right, because of the introduction of anti-greenwashing rules. So does that tell you that maybe we're getting smarter about ESG, or do you still think a lot of the ESG that's out there is nonsense?
I think ESG needs to be disrupted. I believe in ESG 2.0. And ESG 2.0 is about materiality and authenticity. And that's the portfolio that sits at the intersection of profit and purpose. So I believe in a lot of what Derek said, but I'm not as jaded. I'm hopeful. And so I think ESG 1.0 was either investing in naturally low carbon tech companies, or the index hugging just slightly overweight tech, slightly underweight energy, and that is nonsense, and that is greenwashing. And when you talk about those big numbers in ESG, the problem is 70% of ESG money is passively invested. So we will not have an energy transition unless we have an investor transition. And so the reason Engine 1.0 was so popular, or Engine number 1 was so popular, I think, was it enabled these large passive asset managers to tick an ESG box without changing their passive investment strategy. So I'd say we've gone from passive to passive aggressive. And if I look at that strategy, even if they get everything they want, what are they doing? Accelerating the demise of Exxon? I'm not sure that's the answer either. I think ESG 2.0 is active management, because I think you get what you inspect, not what you expect. So when I went around thinking about how to devise an ESG strategy, I started with a blank piece of paper. And I sat down with my ESG advisor, who is the founder and former CEO of SASB, and we said, let's define materiality. What is the problem? It's decarbonization, right? If the Arctic goes from 31 to 33 degrees Fahrenheit, that's the difference between swimming and skating. This is a problem, right? So then, right. Then you need consensus around what is material. And in the equity markets, there is no consensus. It's like the ratings agencies pride themselves on being different, which is very confusing, and it doesn't drive capital the way the debt markets do. In the debt market, you don't get a company rated investment grade by Moody's and junk by Fitch. It just doesn't happen. There's a consensus around materiality. So what we did, and we think it's highly disruptive, we want an entirely different framework. We believe that there's a radical new way to measure impact and investability in decarbonization. And this is how we think about it in our portfolio. These companies have a fiduciary duty to decarbonize if they tell us they are going to. So I look at that numerator and I say, great, your carbon footprint is independently measured and audited. I'll take that. Now show me your CapEx. Let's break it down. Where and how are you investing in decarbonization? And then if your carbon footprint is coming down, right? I can tell the efficiency of your carbon renewal. So, and that's holding them accountable. And that's different.
Well, and it's interesting. You talk about format. Laura, come on in, because I think you have created a new format for companies to really take an inward look at how they are doing things, how they sell products, how they do services. You're not maybe directly involved in ESG investing, but you're changing the proxy seasons. There are, issues being brought up that were never brought up before when it comes to the practices at companies. Talk to us about what we're doing. Do you really think something's happening, that they are looking much more inward when it comes to their biases and how they approach customers and clients and how they do things?
Yes, and I think this conversation that we've just had about ESG is the exact reason I wrote my report that's coming out today. It's called The Rationale for and Key Elements of a Business Civil Rights Audit, because we don't want greenwashing type activities in the civil rights spaces. Over 500 corporations said something after the murder of George Floyd, and there were a lot of good statements, and there were charitable contributions, and there were a few good programs, but companies need to go deeper. And so I've outlined what I think is a set of baseline practices for companies to use if they are serious about ending discrimination within their own walls. And it goes further than diversity, equity, and inclusion. I mean, we're asking questions like, we want companies to ask questions like, are my products hurting communities? Do people with disabilities have access to our platform? Are we locating toxic waste plants in minority communities only? Is our facial recognition software working on people with darker skin? And how do we address those practices and make companies more equitable so that they stop hurting people? People don't want all of these platitudes, just like you have in the ESG space, that we're a green company and we're anti-racist company. The time for the platitudes is over. It's now time for companies to get down to the serious business of self-examination. And this is what the civil rights stakeholders and worker rights stakeholders are calling for.
Well, Barbara, you brought up too, engine number one. Folks, let me put it out to you. Tariq, was engine number one a sign of progress in terms of getting, those 3 seats on the ExxonMobil board earlier this year? I've talked to engine's number one CEO just last week at Milken, and she says, I hope Exxon will change its business model, acknowledges it will take time. But is that a step in the right direction?
I mean, it's
Sounds like
it's marginally helpful in the sense that, they can go and push a more aggressive view around the need for Exxon to build a newer model based on, transitioning to renewable, just like tobacco companies are becoming, vaping companies or whatever. There's no question they can push that faster, but the fact remains that absent regulation, they're going to go onto the board of an oil company and have a fiduciary duty to shareholders to maximize value. If the core business model of that company is harming society's interests, then it's pretty simple. They're going to have to lose money, right? ExxonMobil's they're not going to make as much money as they otherwise would have, absent science telling us that we can't exploit all the fossil fuels out there. And some of these solutions, they worry me because they just, imagine if in the 1950s, the answer to evidence that smoking causes cancer was not that, and think of like responsible business and like civil society. The answer wasn't that we should go out there and ask the government to, tell these companies to disclose the risks, put it on the box, regulate the sale to minors. which obviously saved lives, right? Instead, the answer was that we act like the government doesn't exist and regulation is not a tool in the toolbox. And instead, the answer is one-by-one proxy fights against tobacco companies so that you can get on the board and have a fiduciary duty to shareholders to tell them to sell less cigarettes. I mean, it's the same reason I look and say, well, in the post-World War II period, I mean, we have to ask the question that the outcomes on economic inequality were better from capitalism in the U.S. in that period. The S, let's say, not all S areas, but some of them at least around economic inequality. The E, you had, Richard Nixon founded the EPA in 1970. We didn't have ESG. We didn't have a parallel financial system of green assets, right, that was purporting to undo what the regular financial system was doing. And it's because I would argue that, regulators were at the, more aggressive about saying there's a divergence between short-term incentives of many of these players in the system and the long-term public interest, right? Those are negative externalities. And
Carol, I have a question though.
Yeah, go ahead.
We keep talking about ESG as if it only has to do with environmental issues. And I thought there was a social element in it. And I want, people to focus on what ESG broadly means, not just the environmental impacts. I think that's really important.
Well, Laura, do you feel like we're making progress on social? Or go ahead. Do you feel like, Laura, we're making progress on social?
I think there's greater awareness, but, the ESG people in a corporation sit over here, and, the diversity and inclusion people sit over there, and the CEOs are kind of left off the hook. The CEOs and the boards of directors need to be held responsible for all of the components of ESG. And, we're talking more than diversity and inclusion when it comes to race. We're talking about making sure your products are not harming people. And so what we are really seeing, I think, is an opportunity for leaders to lead and to embrace all elements of ESG and say, okay, let's agree to some standards here so that we can measure it. Because if we can't measure it, we can't fix it.
Agreed. Barbara, come on in on this, because I think we need to think, we know there's a problem. And there's a lot to be done.
It's all about measurement, whether it's carbon accountability or, gender accountability. What is the numerator? What is the denominator? What is the rate of change? And what did it cost you to get that change? This is the way I think about any big problem, because you need the trajectory and you need the pace, or you're not going to hit that target, whatever the target may be. But, the other thing I think was quite interesting was when Tarek talked about the taxes on carbon. I don't want to be engine number one. I want to be the little engine that could. And if we're going to accelerate this energy transition, we need to invest in the copper and nickel and all these things that are historically taboo for ESG. And, Tarek, you're in Canada. You have a $40 per ton carbon tax. That's really interesting, because I can find carbon and nickel companies that are mining in net carbon neutral ways, and they will never have to pay that tax. So it's the idea of turning carbon from a liability into an asset by getting ahead, using your CapEx to get ahead of that huge liability. And these are the real ESG leaders. And these companies that are led by such visionary CEOs, Laura, they're engaging, their communities, and they're really positive about it. So they tick every ESG box. But I agree, you have to have a holistic approach to this. And those are the companies that I want to hold out as ESG leaders and get money to. It's not Salesforce. It's not Facebook. It's not Google.
Tarek, how do we do this, though? I think about quarter to quarter, especially if you're a publicly held company, we're looking at your top and bottom line. We're looking at all these financial metrics. We're all judging a company based on them because those are the accepted ways, that a company is measured. You have the, regulators who've decided what needs to be done by companies when they do their financial reporting. So how do we kind of hold a company feet to the fire when it comes to ESG metrics and being better, really better? How do we do it?
It's difficult, right? Because, as you mentioned, the system is very short-term oriented, right? It's capitalism. There's an initiative that BlackRock's one of the founders of, actually, called Focusing on Capital for the Long Term, FCLT. And it's a sort of a think tank that has all kinds of research that shows that, to your point, capitalism becomes very focused on the next quarter. That I think sort of is central to the premise that certainly for the E in ESG, that you're not going to find an incentive for the players in that system to invest in long-term sustainability changes if they're if those pay off in 10 or 20 years and they get paid in the next few, right? Can they do? There's a lot of tools and things that they can employ, and I think a lot of people great things. But my worry is the incentives they remain to do things that are in short-term benefits of the players of the system, but not in the long-term public interest. And
but
those,
you know what?
those.
Come on in, Laura.
But you know what? I think when we look at incentives, we also have to look at the workforce. Millennials are the most diverse workforce. They want more from their companies. They want to work for value-driven companies. And as companies look to the workforces they want to hire and the communities that they want to serve, they have to look at other metrics besides profitability. But that being said, all of the companies that engaged in civil rights audits, Starbucks, Facebook, Airbnb, none of their profitability suffered as a result of doing this deep analysis. So I think we shouldn't set ourselves up to have this false choice where you're either for profits or you're for ESG concerns. I think you can do both.
I don't disagree, but one thing.
Go ahead.
Sorry.
Go ahead, Tarek.
One thing I'd say is that their profitability didn't suffer, but I'm not sure how much progress was made against those social goals. I mean, the household income gap between black and white families is the same as it was during the civil rights era, right? So, when I look at it, I'm not jaded, right? To your point, Barbara, I'm just a realist, and I look at the system now, and I just turned 43. The majority of the people younger than me don't believe in capitalism. That's a fact, right? The majority of millennials don't believe in capitalism. The oldest of which are turning 40 this year. Gen Z are even more cynical if you follow what Greta Thunberg said with her recent blah, blah, blah speech. They're increasingly becoming convinced that this is a system, that capitalism itself doesn't work, right? Because the only version they're seeing of it is one that is not solving long-standing social problems. And so while I agree that we need to build tools, and I think companies can do better, I'm doubtful that if we leave it to voluntary compliance on the most important issues, we're going to see a significant amount of change, right? At the speed that that's.
We only have about 4.5 minutes left. So where do we go from here? And I know, Tarek, you've talked about that we need to think about ESG just like we thought about COVID. And you say, in some of the writings that you've done, the nine words we need to hear to build a sustainable future. I'm from the government and I'm here to help. So the government needs to be active, just quickly.
I think that we should release the chains of neoliberal ideologies that say that free markets solve all problems. Look, the solution to inequality, if you ask Tom Piketty, is raising marginal taxes, historically marginal tax rates on the wealthy, right? You ask William Nordhaus, who won a Nobel Prize in economics, he'll say that you need a price on carbon and a bunch of other solutions. We don't really get there if there's a reflexive anti-taxes and regulation angle. And I'm not saying, again, lots of other things can't be done in it, but systemic problems require systemic solutions that change the incentives of the players of the system so that they serve the long-term public interest. I think the biggest part of the debate and the biggest part of that change is going to come through government action.
Barbara, you think, though, what the investment industry needs to kind of agree exactly what ESG is and the materiality of it?
Yeah, but I mean, if I just want to take another angle of ESG and picking up on what Laura was talking about, and just about diversity in the industry, collectively, minorities in our industry run 1.3% of the assets. So what can we do to change that? Let's talk about solutions. It's very powerful for someone to write Ontario teachers or CPPIB or Texas teachers or any of these big pension plans and just ask them, what does the diversity of their asset allocation look like? That would create a very uncomfortable discussion in the boardroom, and that's something anyone can do. So when you talk about change, it can come from the bottom. It doesn't always have to come from the top. And so I think people need to feel empowered to stand up for the change they want to see in the world.
Laura, what do you think that we need to do to really be thinking about and how we make it better and put the right policies in place, especially when you have prominent leaders like Jamie Dimon of JP Morgan saying, when he was asked about corporate civil rights audits, he said they amounted to bureaucracy and BS. You are working with companies.
Jamie Dimon seems to change his mind a lot, so I'm not worried about what he says. But I do think the investment community, the activist investors, the pension funds, are really something to pay attention to. There were at least 8 racial equity audits put forth in shareholder meetings earlier this year, and they got like 30% and 40%. I mean, Tom DiNapoli, the comptroller of New York, put something before Amazon calling for a racial equity audit. It got 44% of the voted shares. So corporations and their leaders are going to have to pay attention. And I do think government action is very important, but historically, government action follows social movements. And so I think we're seeing a social movement with investor communities, with stakeholder organizations like workers' rights and civil rights organizations. And so, and you're all, we also saw legislation introduced this year, or being introduced by the chairwoman of the Congressional Black Caucus, Joyce Beatty, on requiring companies to do racial equity audits. So I think there are storm clouds brewing, and a smart company will get ahead of the storm and not wait for the government and hold themselves out as leaders in this area.
And let's not forget, we see BlackRock earlier this year. They're going to do a deep dive into their business with a racial audit. Color of Change, influential racial group, they're calling out a lot of tech giants to conduct race audits. Citigroup just became the first Wall Street bank to a racial audit. So maybe some baby steps forward. We just have about 40 seconds left. Final thought quickly from each of you. Tarek. Nope, do we have audio?
Sorry about that. I think Laura's right that diversity and inclusion areas are hard to audit, and they do come from social movements. So I agree with that. I think for environmental and economic inequality issues, I think you really need to get the government to move.
Barbara, final thoughts.
I wanted to thank you for the panel. I think conversations like this are key, right? If you can't talk about it, you can't see it, it just gets buried. So thank you.
You guys gave me a lot as a journalist to think about and ask guests. Laura, final thoughts.
And I'll just say, read my report. It comes out today. And just ask yourselves whether or not corporations can do more on their own, or they're going to wait to be sued or, legislated by Congress.
And I think you can find that report at Bloomberg.live. All of these individuals have written a lot, and it's some really deep thoughts, and I highly recommend all of it. Tarek, Barbara, Laura, thank you so much. It's a conversation we have to continue. Thank you both. Thank you, all of three of you. Thank you.
Hi, everyone. I'm Shanali Bassick, financial correspondent for Bloomberg News. With me today, I have Ryan Williams, the CEO of real estate investment firm Cadre, and Raymond McGuire, who was the former New York City mayoral candidate and former vice chair of Citigroup. You know him very well. Thank you both for joining us. One place I really want to start is how you two met, because it goes back a long time, and it really speaks to mentorship and the importance of a network when it comes to equality and finance and bringing people up. Ryan, how did Ray get involved back when you were at Harvard and starting to try to create more opportunities in financial services for underrepresented groups?
Yeah, thank you for having me. And, Ray and I go back about 15 years. And Ray, for me, has really been an inspiration and somebody who showed me what was possible for people like me, people who came from working class backgrounds, and especially in a place like Harvard. So I met Ray through some outreach I did. I started an organization my freshman year called Veritas Financial Group, really to help level the playing field for minority students looking to get into the financial services world. And there was one clear shining star that I had read about and I had heard about, who was a Harvard man through and through. After outreach and some persistent outreach, Ray agreed to speak to the organization at our first annual conference, and then have a side conversation with me as well about what I could do and what I could be. And that was the start of the relationship. And since then, I've done everything I can to cultivate it, to learn from Ray, to be guided, and then to learn from his example of giving back as well. So we go way back, and I'm grateful for everything he's done, and I think it speaks to the power of mentorship in a space that has been pretty homogenous, like the financial services industry.
Right, and you have obviously, worked at a number of financial firms, Goldman Sachs, Blackstone, and now forming your own firm. Ray, in your long history on Wall Street, has there been a significant change? And especially in the last year, has there been a change that's persistent enough to keep the ball rolling?
It is a great question. You know, I've been in the financial services world for last year marked 36 years. And so while we have made some progress, there's still miles to go before we reach the peak of Everest, if you can allow me to use that. And I've never climbed Everest, but you can imagine. I use that as an analogy to give you a sense of the distance from which we have come and the distance to which we need to continue to ascend. So there's still a lot of work to be done, a lot of work to be done. I'm encouraged by the examples of people like Ryan. There are examples that exist around the country, clearly at our alma mater, which we celebrate, but there are examples that exist around the country, and we need to make certain that we identify them and give them the opportunity.
You know, it's worth speaking about the role of not just the financial community, but also the corporate community at large. Ray, you had been running for mayor of New York City. You got to see this from not only your time at Citigroup, but also as a member, a significant member of this community. Have you seen in productive ways the private sector fill in the blanks, so to speak, in the last year in a way that can create meaningful change?
Well, you described the last year. I think you need to look at the history of the private sector involvement. Private sector needs to do more, to be quite candid with you. If I look across the financial services industry and look at, trillions of dollars of assets under management, and look at the representation, the demographic, racial, gender representation in the financial services industry writ large, it still has enormous work to do. And it can't just be the George Floyd moment, about which I'm certain we'll have some discussion. It's got to be a movement. And up to this point, I've not seen the financial services industry step up in any tangible way that it needs to. The private sector has to get involved. Private sector can't sit on the sideline. Acquiescence and complicitness is not acceptable in a world where we're facing two existential crises, climate and wealth gap. And the private sector cannot abdicate its responsibility.
Well, speaking of George Floyd, since the murder of George Floyd, we did see last year just corporations make some commitments, a number of commitments. But since then, Bloomberg has been tracking how much this comes up in conference calls and other outreach by corporations, and the level has really waned since then. Ryan, what do you think needs to be done to keep this at the forefront of profit-making entities, right? I mean, how do we bring society back into the fold in this conversation and equality?
Yeah, well, look, I can speak to my experiences, and I can speak to what we're doing at Cadre. I don't have, a silver bullet by any stretch of the imagination in terms of long-term change catalyst. But what I will say is that action is the first thing, and accountability is critical. People being institutions need to take the same level of creativity and tenacity that they take to solving business problems and apply it to the disparities that we see and the lack of representation for people who look like me. And frankly, I'm fortunate and privileged. I know that I'm in many ways one of the few folks who have had institutions back me and the like, and I shouldn't be the exception. There should be more focus. There should be more accountability. Should be more tracking. We should tie, things like compensation and other incentives to diversity because it's a competitive advantage. And what we've tried to do at Cadre is just that. We use our platform to diversify the real estate ecosystem, starting with operators, starting with minority depository institutions and Black-owned banks that we're partnering with. And hopefully it's a model that others can emulate. But I think it does start with, number one, people putting resources behind these efforts and, holding themselves accountable the same way they hold themselves accountable to business results.
And Ray, maybe you can double down on this idea. You had mentioned that the financial system is not doing enough, right? And that is seen by the numbers, right? But also this moment that had started last year in the wake of George Floyd. I mean, what has it meant? How has the conversation advanced since then? And what do you need to see from here?
So let me be very clear about this, and I think your Bloomberg tracker will identify or will actually corroborate this. I think there were $49.5 billion worth of commitments made immediately after George Floyd, and we all felt that 8 minutes and some odd few seconds of cold-blooded murder didn't reflect the best of us, didn't reflect anything that we wanted to acknowledge was any part of us. And so we reacted. We reacted with relatable comments and commitments. If I look at your tracker, if I look at other analysis have gone on, I think we've spent a few $100 million of that $49.5 billion. And many corporations have been reluctant to give you the data to track what their commitments or the accountability of those commitments. So the question is did we have a moment or have we created a movement? I want to encourage us to have this as a movement and not just relatable, well-written, heartfelt communications out to the public and commitments that we've yet to satisfy. But if we're going to make a real difference, then we have to commit to it. And I look at just I look at how many people in financial services who look like me and Ryan who have profit and loss statements. I look across the asset management industry and I can point to maybe 5 people who are in leadership roles. It should not be the case. It is the case that Ryan Williams is a proxy for one of two things. If he does not do well, the response is, I told you so. When he does well, as he's doing, the response is he's the exception. And so we can't have the systemic inequities be addressed by exceptions. We have to have them be addressed by a commitment and a movement, which yet today has yet to come to fruition.
I also want to discuss a problem inside of the workplace. Ryan, you and I have talked about this before, and Ray, I believe you've told this to Ryan. I've heard it separately. Marty Chavez had told this to me from Goldman Sachs, that when you're a minority, you have to work twice as hard, often to get half as much. I think the reason this is relevant right now is because we're in a place where we don't have Black people in America being employed at the same rates as white people in America. We also have high levels of employee burnout and turnover in this country right now. So, how can this issue start to be fixed? What steps can employers take to make sure that their workforce, their Black, their Latinx, and their female workforces and other minorities that they have are getting opportunities inside of their ranks?
I think you directed that to Ryan, and I think what he's doing at Cadre is an example of that others can emulate. So Ryan, why don't you kind of give us a sense of what you're accomplishing at Cadre?
Thank you. So there's a lot that can be done. I mean, I think the first point is we all have to have more compassion and understanding and recognize that the events over the past year and a half were not just some spontaneous combustion of frustration and anger and the like. There have been deep-seated, long-standing disparities and inequities that have finally reached, the collective consciousness. And what that means is that there are a lot of people who are outsiders, who continue to be outsiders, who have not been let in, to a lot of these closed-in networks. And, we need to do everything we can to creatively reach out to a lot of those folks and to reimagine some of the quote-unquote criteria. One of the points Ray brought up that just really resonates with me is the reality that for too many minorities and others who have been marginalized, you've got to be exceptional just to get sort of baseline opportunities. And that's completely true. It rings very true to me and what I've seen at Cadre. But I think it also highlights that the way folks look at risk, and the risk ascribed to people who are different is completely broken. And, again, what we've done at Cadre beyond internships is rethought, promotion and who we promote. We've instituted employee resource groups focused on a number of different groups across the organization that have been marginalized to give people a voice and a forum and to let others who have not been marginalized listen, learn, and act. And I think, again, it starts with resourcing behind these conversations, but also action, and, sort of putting aside this whole preconceived notion of there being more risk because, somebody is not a white male, especially in industries like finance, real estate, and tech, and that they can't, step up and excel. And we've seen, frankly, the fact that we have people from all walks of life at our organization be a competitive advantage, allow us to find opportunities others will miss. And again, I think that will continue to be true, especially as society changes and becomes, more multi-racial, multi-dimensional, and more diverse. And so there's a business imperative as well for organizations to really rethink, the makeup of their workforce, who's being promoted, who's being heard, who's not, and then the burden that a lot of folks who are Black and brown have, especially in these times when the microscope's even more so on them as to their performance and the like.
Ray, I'm wondering how this has impacted you and your career, right? Obviously, you have banked many of the world's largest corporations throughout your career, as well as risen to the top ranks of one of the biggest banks in the world. That idea of working twice as hard is not the part that everybody sees. And so, how could things have been different?
I think I'm not convinced that they could have, other than this risk mindset. So let's stay with that. Financial services, in order to succeed, you got to manage risk. It's risk mitigation. And so you work harder, you over-credentialize so that when people look at your resume, which before they see the resume, you are a high-risk candidate. When they see how well you've performed, if they see the credentials, then they've mitigated their risk and they're prepared to make the investment, if you will. Or they're prepared, if not make an investment, they're prepared to take a chance. And so if you look at Ryan's background, if you look at my background, and look at others who have succeeded, many of them have succeeded against a risk profile that would have excluded them from the outset. We need to begin to think about how we manage that risk profile, the risk mitigation exercise that culturally we have gone through, which has resulted in the systemic inequities in healthcare, in education, in the economic system, in housing, in the criminal justice system. That risk mitigation mechanism that is cultural is yet to be addressed. And so it is the case still today that in order to be equal, you got to be better. And so in my world, in my 30-some-odd years of Wall Street, that's always been the case.
It's interesting because when it comes to risk mitigation, Ryan, you've given me this really amazing story about how you were often denied a loan. And so can you explain that process to me, and what was it keeping you from getting access to the financial system as a borrower?
Yeah, so the story you're referencing is one that happened, I guess, more than 10 years ago now. I'd started a real estate business when I was an undergrad, buying single-family homes in Atlanta. I wanted to take that next step in my growth and buy apartment buildings as well. And I had some classmates and others who had backed me. I had great credit behind me. I had a track record. I was young, of course, but for my investors and the people that backed me, they said, "Look, getting a loan with your track record and with our backing should be a no-brainer." And I got connected to a couple of banks. First banks, gave me a bunch of different reasons why they wouldn't finance this property, all of which came down to risk and, me being a more risky borrower. And I said, all right, well, maybe it's just a couple of outliers there. 8 banks later, I was turned down by every single one, even after putting, people who were millionaires credit behind me. And the final bank, and I really made this his last-ditch effort, that gave me a shot, was a bank called Citizens Trust Bank, Black-owned bank in Atlanta, founded in 1921. Dr. Martin Luther King was an advisor. Coretta Scott King was on the board for a while. It was started by a few Black entrepreneurs, frankly, to serve communities that had been underserved, predominantly Black and brown communities. And they gave me a shot. They issued me the loan. We made a good return on the investment for our investors. And I don't think I would have been here, at least as quickly as I have, if I didn't have that institution take that shot and give me that opportunity What we're trying to do with Cadre is level the playing field, is support other entrepreneurs, because again, I should not be the exception. I should not need to be exceptional to have baseline opportunities. And I think it's a lesson that others can also emulate, the power of institutions, and especially community-based institutions. And frankly, the fact that so many have been deprived of capital and resources, which ultimately hurts the underlying communities themselves and people who have been marginalized for a while.
Ray, it's interesting. Yeah,
just
please.
Pick something they said. He should not be the exception. Let's stipulate that. But in order for him to be where he is, he has had to be exceptional. And so here's a student at Harvard who reaches out, who wants your probe to see how he's thinking about the world and himself. That reflects exceptional. This is I'm dealing with genius here, and these are words that I choose very carefully. In order for him to be where he is, in a majority world that shies away from risk, especially for people who look like Ryan, just think about that which he has had to overcome to be in a position where he could start and run successfully Cadre.
I know both of you have had a lot of conversations with a lot of corporate leaders over the last, maybe lifetime rather than year, right? Although the last year was certainly a very big one. What are things that you can share with folks today on tangible things that they should be doing and looking at, starting now, if they haven't been, that can start to move the needle, right? Maybe you got us started here.
Listen, the thing that is educational system today is an abject, catastrophic failure. It should not be the case in this city that we spend $27,000 a year on educating a child, and in the Bronx, when the school year opens, that the parents have to come together and buy toilet paper and crayons. It should not be the case that 3rd through 8th grade Black and brown boys and girls, 8 out of 10 are below grade level in reading and math. It shouldn't be the case. So we first have to begin with the educational system and how we transform that. Modern day language, transform, radically transition that from its abject failure to something that at least suggests some kind of success. We need to get capital in the communities. Remember, there is no social justice without economic justice. We have 11+% unemployment rate in New York City, writ large. In some of the boroughs, it's 20+%. So unless we get education and hope and training and capital in any of these communities, the future is going to be grim. And we have to begin to address that now. So I would say capital, workforce training, education, community centers to give our children some sense of hope. It can't be the case that you go into a school, which is what we've done over the past couple of days, and find firearms amongst 13 and 14-year-olds. There's no hope. We got to inject hope, which means we got to invest in the communities, put capital in those communities, in the community centers, identify the leaders, invest in those leaders.
Ryan, would you like to add?
I don't know if I can add much more to that, but I'll touch on the economic justice and the economic dimension to what Ray just highlighted, because as you mentioned, Sonali, there's been a lot of statements and a lot of declarations from institutions about their commitment to diversity and their focus on backing diverse managers, diverse allocators. And I'm very curious to see what the numbers actually show. I'm very immersed in that world, just given, we've raised institutional capital. And what I've seen is that there's still a lot more talk than action. People are not putting their money where their mouth is, people being allocators in institutions. And again, I know that I'm very fortunate to be in the position that I'm in right now, but there are a lot of people who are incredibly capable, real estate, private equity, managers that come from underrepresented backgrounds that are not getting the opportunity because of this whole risk dynamic. So if I were to give some feedback and advice to institutions and allocators of capital, what I would say is, diversify your manager base, put your money where your mouth is. And I guarantee you that, those managers that come from diverse backgrounds had to go through a whole lot to even be in the position that they're in to be talking to you right now. And, what better attribute for someone other than integrity is there than resilience and the ability to prosper in the face of adversity. So to me, I think that the accountability on the economic justice front can also be applied to a lot of the financial institutions that have aggregated capital, but still have a pretty homogeneous manager base and partner base. And hopefully, the past year and a half will illuminate these issues in a way that drives action. And as Ray had highlighted so well, it's not just a moment, but a true movement.
Closing thoughts here a little bit. It sounds like accountability, and that seems to be a big part, both from investors as well as anybody who allocates capital, as well as sits at the top of a business and taking chances on people. Sounds like a big part of this as well. But yes, we have a minute or so left. Any closing thoughts on top of that as well? I mean, this is definitely a discussion, obviously, that you'll hear from all day, but we will follow up with you as well.
Yeah, my closing thoughts are, look at the example of Ryan Williams and look at what that example is translated into when it comes to opportunity. Harvard, Goldman Sachs, Blackstone, as well trained and as well credentialized as any. Ryan should be an example of that which is possible through all the risks that people have taken. They've mitigated that risk based on his credentials and his performance. We need to make certain that we identify the other Ryan Williams of the world and use Cadre as an example of that which we can do if we're committed, and not just give lip service to it, but to make certain we actually put dollars behind it and put a little risk capital to work. You can see the returns are going to be incalculable, not only from a social justice standpoint, but importantly from a fiduciary standpoint, and the returns that get generated, which you got to be in the top decile, if not higher. That's what I would encourage us to do.
Do you have any closing thoughts as well?
Thank you, Ray. My closing thoughts are the importance of mentorship, and you still need to see to be able to believe. And I'll reciprocate what Ray had said. And I had a lot of dark times. When I was an undergrad, I went to public schools. I didn't really know, frankly, what I was doing my freshman year. And people like Ray, and Ray specifically, was a beacon of light for me and for my roommates who also came from similar backgrounds. And I think it can't be forgotten that, examples, leaders like Ray, who frankly had to navigate way more challenging circumstances than I did in the financial services space, and one of the earliest pioneers in terms of just exceptionalism, that example in highlighting more folks like Ray have a follow-on effect, and that there'll be so many more people who can see what can be done. And so this mentorship, I think companies need to think about formalizing mentorship policies, connecting to connectors, and again, creating a better future.
I couldn't thank both of you enough for your time. Hope to have you again soon. Thank you.
Thank you. Well done.
Thank you.
Hello and welcome to our session on how some of the world's top cities fare for working women. I'm Ruth David, Bloomberg's Deputy London Bureau Chief and Senior Reporter. Joining me is Rosalia Vasquez, who's econometrician and wage specialist at the International Labour Organization. Rosalia, thank you so much for chatting with us. I would like to start with one of the problems that we found in ranking some of these top cities was the absence of good data. Data is something you are very, very familiar with. You also highlighted in our conversations that sometimes the data does not capture all the facts, like with our cities of Singapore, Dubai, and Hong Kong. Could you talk a little bit about what you have seen on the treatment of women in these cities?
So thank you very much for having me here. Yes, that is the case. You asked two questions. Let me see if I can answer the first one. Data usually is, when we say data is labor force surveys, usually are representative of the population. And if labor force surveys are done in a way that they capture the working population, then we will have a good representation of the whole wage distribution, and therefore be able to estimate gender pay gaps or gender inequality in general. But sometimes in some countries, particularly in city-states, the ones that you've mentioned, the labor force is not necessarily going to be fully captured by this type of surveys because, for example, they usually may target households in the population, but these are households that are registered, and the households may not necessarily provide data on those people who work for them, for example, domestic workers. And these domestic workers are part of the labor force, but are not captured because surveys are not designed to capture them in these particular cities. In the rest of the world, that may also happen. You may actually interview a household where the woman lives in the household and works as domestic workers outside her household. But you may not necessarily capture women who are living domestic workers when the household is surveyed because the people in the household don't perceive these people as being part of the household or the labor force. So sometimes what you find is that women who are more likely than men to be at the low end of the wage distribution, you actually don't necessarily capture them because they are working in sectors that labor force surveys don't necessarily have a good representation of these sectors. Whereas in the case of men, they're more likely to work in sectors that are well captured by labor force surveys. So this is the problem that we have in city-states like Dubai, in places like Hong Kong, Singapore, etc., where you have a significant proportion of women who work in the labor market as domestic workers and who are not necessarily captured by these surveys. So what we end up is with an estimate of the gender pay gap that is potentially, let's say, a downward estimate of the reality that goes on in the country.
And gender pay gap was something that we saw across the board in all of the cities that we surveyed. Some cities, it was way more than the others. For instance, in Tokyo, it was really high, but in places like London and maybe even Germany, where they've made it mandatory to report on the wage gap, or they're encouraging companies to do that, you get to see it more. How much do you think the laws and quotas help to reduce the gender pay gap, and what are you seeing around that now?
Okay, so at the moment, what we have estimated at the International Labour Organization is that the gender pay gap across the world, on a weighted average, taking into account the size of countries, is about 20%. Now, that was a pre-COVID estimate, so we don't know exactly what's going on now and how it will have changed after the COVID pandemic. But what we do see is that in countries where you have not just the legal system that punishes gender inequality in the world of work, in the workplace, but the instruments to make these legal frameworks work, in these countries, it is likely the case that the gender pay gap is either less or it will be reduced in the future, because these are countries that have put in place elements very recently. So we still have to see how over time these elements work. But for example, the one you mentioned, Germany. Germany is a country where a couple of years ago, 3 years ago, they decided to actually make enterprises have compulsory audits. If you're a work employee, a wage employee in Germany, and you think as a woman or as a man that in your enterprise you are being discriminated and other people who have a similar function than you are getting paid more than you, you have the right to have wages disclosed to you by this enterprise. These are for enterprises of more than 250 wage employees. You have other countries where similar rules apply. For example, in the case of Switzerland, very recently, for enterprises that are higher than 50 wage employees, what you have is that you have to have a gender audit if you want public procurement. So if you want to have access to public procurement, you have to show that your enterprise does not discriminate in terms of wages, and that you are auditing your enterprise in terms of gender equality. And that will give you access to that procurement. You can actually have this auditing going on. If there is any problem spotted, that you can actually do something to reduce the gender pay gap. And that actually will potentially have an impact. What is the impact? We don't know yet, because we need a few years for us to collect data and to see how the impact of this legal system has actually changed. Then what we also observe is that in countries where you have effective minimum wages, that's what goes on at the low end of the wage distribution, that there is a legal floor, then, and of course this works, it means that there is compliance with the minimum wage system, then the gender pay gap is much lower at the low end. And it is at the low end where you have a significant fraction of women working in the labor market. So in these countries, the wage gap is usually something that is defined at the upper end, where there is far more discretionary wage determination processes going on.
And are the cities, in your experience, usually a reflection of the countries? Because in a lot of the data that we've used country data as the cities being represented there. Is that what you have found as well?
We don't usually work on a city level. That's because it's very rare to find data that is representative at city level. What we do is we estimate at country level. One thing that it can be said is that the workforce in a city can never, it's not usually the case that is the same as in a rural area or in the rest of the country. And some cities are very specific. You concentrate a significant amount of people who are in the labor market as wage employees, whereas in rural areas, you may have more on-account workers, more informality, particularly in low and middle-income countries. So clearly, the reflection in a city may not necessarily be the reflection of what goes on in the rest of the country. What it is true is that if you have a city which concentrates a significant number of wage employees, and when we talk about the gender pay gap, we talk about wage employees, not necessarily about on-account workers, then of course that city may be very much representative of the full population of working age population in that country. That is usually probably the case. So for example, in the case of Japan, Tokyo, if you have data that is representative of Tokyo, probably gives you a very good indication of what is the gender pay gap in the rest of Japan on aggregate. But it's not necessarily the case that in rural areas in Japan, the gender pay gap is the same as in Tokyo.
Absolutely. And I guess we are looking at the formal employment, right? Not informal employment, which is what you would see more in the rural areas.
That is the case. But as I said, when we talk about the gender pay gap, we talk about comparing women and men's earning of women and men who work for someone else. Because if you work for yourself, if you're an own-account worker, and that's where informality is highly defined, then the gender pay gap is not something that we can, it's a decision that you make. It's not necessarily true that as an own-account worker, you have a much better work. You might have a lot of working deficits. But when we talk about the gender pay gap, we talk about wage employees. Now, wage employment can be formal and informal. And in both cases, when we estimate the gender pay gap, we take both formal and informal into account. What happens is that in countries where you have significant amounts of informality, it's the case that there is non-compliance with the minimum wage. And that means that you will have a much higher gender pay gap in these countries at the very low end, even if the country has some sort of system of minimum wages. For example, in the case of Mexico.
Yes, I'm just curious, where have you seen the gender pay gap has reduced the most in the last decade?
In the last decade, we would say that the gender pay gap has actually remained fairly constant across the world, in many countries across the world, in just about the majority of countries. The gender pay gap went substantially down in the beginning of the 1990s. And since the turn of the century, we can say that there has been very little change. And the reason why it changed in the 1990s is probably because there was a lot of incorporation of women in the labor market and an increasing amount of women participating in occupations and sectors that were traditionally for men. But then what happened is that we arrived at the global financial crisis, which had a much bigger impact among men, because it was a crisis that impacted on sectors like trade, sectors like construction, transportation, banking. And this is where men are more likely to occupy in terms of wage employment, and less in terms of women. Now we have arrived at the COVID pandemic, and the COVID pandemic has impacted more on women rather than men, because women occupy more type of jobs in things like hotels, accommodation, more that kind of presential jobs that you have women, where you have women who are far more likely to participate. So it may be the case that this time it has been the reverse impact compared to the global financial crisis, where the gender pay gap went down because men were more impacted than women. Now it could be the case that we have actually gone back a few years or maybe a decade in terms of reducing the gender pay gap as a result of COVID. But as I say, we still have to get the data. We also have to see how COVID evolves in the future, if it's now slowing down or it's picking up again. And then when, let's say, we go back to the steady state, the point where things are somehow comparable to a previous period and the crisis is over, we will be able to see with the data the extent to which this new crisis has impacted on gender inequalities, not just in terms of the gender pay gap, but in terms of gender participation, which has also an impact directly or indirectly on the gender pay gap.
Absolutely. And, we've seen this when it comes to cutting carbon emissions or when it comes to other global issues where the developed countries are trying to see how they can help the developing nations. We've spoken of a few markets, Toronto, for instance, where inequalities are much lower than in other parts of the world. Do you think the governments can do something, the state governments or the city governments in these places, to help other countries from maybe where their companies are getting their, manufacturing done or have their warehouses? Is there anything that can be done there?
Absolutely. I think one of the key ways in which the labor market works these days is the globalization process. And it is true that you have a lot of industries, multinationals, who are producing through the supply chain in countries like Bangladesh, India, etc. And in these countries, you could have these multinationals, maybe through the government actions or themselves, you could have them reducing the gender pay gap because you have a lot of women who are participating in the supply chain. They are actually earning wages as a result of these multinationals. And the fact that these multinationals operate in governments, like you said, in Canada, or it could be any country in Europe, where the gender pay gap is an issue that is well in the policy agenda, these multinationals should be, and it would be very nice to see how they transfer such type of policies into their actions to reduce the gender pay gap in countries where they have most of the production done. That would be one way in which there is knowledge transfer and policy transfer at the global level to reduce the gender pay gap in countries where the gender pay gap is much substantial.
And I guess we will only see the impact of how the pandemic has affected working women in the next few years. When are you doing the next data collection drive around this?
Well, we are now working on the next Global Wage Report, which is a publication. It's one of the flagship publications of the ILO, and it comes out every 2 years. And the next one will be published at the end of 2022. And we should be able to see, with some estimates for some countries which have already got data, the extent to which the pandemic has impacted on gender inequalities, including the gender pay gap.
Well, hopefully there will be some glimmer of hope around that. But Rosalia, thank you so much. And thank you for some of the solutions that you mentioned and for being part of our Equality Summit. Lovely to speak to you.
Thank you very much for the interview. Thank you. It was a pleasure.
And welcome to this Bloomberg Equality Summit panel on the effect of the pandemic on women in the workforce. I'm Lizzie Burden, UK economy reporter here at Bloomberg, and I'm delighted to say that we've got two very distinguished speakers with us today. First, Dr. Karen Kimbrough, chief economist at LinkedIn, and formerly of Google, Bank of America, Merrill Lynch, Morgan Stanley, and the Federal Reserve. We're also joined by Christopher Rao, assistant professor at the University of Cambridge, which, as an alumna myself, I would say is the world's finest academic institution. Chris's work on the impact of the pandemic on women's work has stimulated various conversations with UK ministers, so I'm sure this will be a fascinating discussion. Thank you both so much for taking the time to join us. Karen, I want to start with you. Earlier this year, the World Economic Forum published research showing that the pandemic had set back equal gender pay a generation. Now that we're hopefully in the recovery phase of the pandemic, is it still the case that women's work has suffered more than men's?
So, yeah, first of all, thanks for having me here. We definitely saw that women were most impacted during COVID. And a lot of those factors had to do with where they worked, the type of work they had, and the disproportionate burdens of childcare. But I would say that we're seeing a lot of resilience now, and in our own data, hiring rates for women are actually exceeding those of men. So we're seeing a lot of resiliency and sort of a comeback story for women, if you will. But it was a pretty dark moment last year.
And Chris, we know that women were far more likely to take on childcare and homeschooling duties than men during the pandemic. And almost as a silver lining, if you can call it that, the reality of juggling work and childcare was really exposed. Have governments and companies around the world done enough to expand childcare provision to support working parents, especially working mothers?
No, so I would say a dire situation got worse during the pandemic. It's very expensive in the US and the UK. In the UK, there are long waiting lists to receive childcare. During the pandemic, access became even more unequal, so non-white families were more likely to be exposed to childcare closures in the US. Private schools were more likely to be engaged in online learning. And I think the policy that summarized this all is that the pubs opened before the schools. So I think we're still a long way from improvements, and research shows that we need childcare in order to create labor market opportunities, in particular for mothers. And we also need good childcare, because poor childcare is linked to worse child development. So we have to think about unleashing the potential of the current workforce, but also to create the skills of the future workforce.
And Karen, even in countries where governments and companies are generous with childcare provision, is this gendered division of labour ultimately a cultural problem that starts at home? Can we break that cycle?
It's interesting you should say that. I mean, one of the things that we observed in our data, which spans the globe at LinkedIn, is that women were disproportionately affected in every single country. There was no country where women fared better than men during the pandemic. So it clearly is something that goes beyond any particular culture or society and is sort of endemic. I think the one thing we can do is have hope that there's generational changes that start to take place. And the more that men, for example, take paternity leave, and that's available to them, the more let's call it the burdens or the opportunities of childcare can be shared between women and men. One of the other things I would also say is that companies need to kind of continue to provide more and more flexibility for workers so that they can, be met where they are, depending whether they have very needy young children or, older children are more independent. Workers need different kinds of flexibility in their schedule. And I think women in particular have always sought out work that provided more, say, schedule flexibility because they needed that for juggling all the other burdens at home.
Picking up on that point, Chris, for so long we've been told that flexible working was meant to be good for women, but if women already tend to earn less than men, in the hybrid model of working where people work at home some of the time and work at the office some of the time, will we tend to see men returning to the office and women working at home while juggling childcare?
That could be the case, and research shows that if you're working from home, you're more likely to be overlooked when the next promotion comes about. So about half it reduces the likelihood of you being promoted by about half in one study. And also we have to worry about flexibility. There are two types of it. There's the good type where the employee decides when to work the extra hours, but there's also the bad flexibility if the employer sets the extra hours and changes them frequently. And it's actually women who are more likely to be on 0-hour contracts, which are the extreme form, do not provide income security and also no career progression. So if we have women working at home on these type of contracts, then we're not going to see career progression.
If you're watching, don't forget to leave us a question to ask Karen and Chris. We'll try to get to it at the Q&A section later on. Karen, I want to talk about a later stage in women's life, menopause. Menopausal women have talked to me about having to wear ill-fitting PPE to work that's designed for men. It's made their hot flushes worse. And we know that older workers have tended to be the last left on government employment support, and it's harder for them to retrain. What data from LinkedIn do you have to understand the impact of the pandemic on older working women?
Yeah, so what we're seeing at LinkedIn in our data is that older women are definitely taking a little bit longer time to rejoin the workforce. So for example, as we start to see this recovery play out, the first ones to kind of come back into the workforce are younger workers or those who are sort of mid-career but highly skilled, and older workers seem to be lagging. I think it's, a lot of this has to do with, one, in some cases, there are older generations that actually didn't fare so poorly during the pandemic. They may have had more exposure to the stock market and retirement funds, at one end of the income spectrum. And at another end of the income spectrum, they may have felt hesitation about rejoining the workforce because of health and safety concerns. So for a variety of reasons, older workers and older women in particular haven't come back as quickly into the workforce, which I think is really a shame. That's not what we want. And so we'd like to see a multi-generational workforce. So I think there's still a lot of work to do.
And Chris, not all symptoms of menopause are physical. Your research shows that not just for older women, but women generally, their mental health was significantly impacted by the lockdowns, and more so than men. How much of that is because of the impact on their work-life balance? I mean, we've heard so much about people feeling like working from home has been more like living at work.
Yeah, so part of it is driven by working parents. There's a study about that in the UK, finding that in particular working mothers, they had to juggle more tasks and suffered worse mental health. But we also have some research in the US where, irrespective of the work situation, we find that the lockdowns worsened mental health more for women than for men. And part of it can be explained by fears of troubles about paying bills and more childcare, but there's an additional element, which one seems to be able to link to the cut ties of social networks. So it's not only the labor markets, it's also the social networks that suffered under the lockdowns and the physical distancing measures.
And Karen, are there any positives to have come out of this crisis for women at work? Are there any long-term structural changes that could be for the better?
Well, if I put my kind of optimistic lens hat on, I would say I do think now there's a wider realization that people can work productively in a remote setting, although I would agree with Chris in saying that, yes, past evidence shows that when you're not in the room, you're more likely to be overlooked. I mean, that seems perfectly reasonable. But I think, optimistically speaking, companies are now much more aware of kind of, let's say, in the white collar space, of flexibility that they can provide. And I think also that there's a moment going on right now where laborers, workers are beginning to flip the script a little bit. They're beginning to demand more accommodations, and employers are offering them. So it may not just be flexibility of schedule, but it could also be, I want to work remote, I want to work hybrid, I don't want to work on Tuesdays, or I want more pay. All of those things seem to be in the equation, and they're all at the moment currently in favor of the worker.
And Chris, can you give us more detail on that? How can employers tailor the hybrid working model so that even if people aren't in the office, they're still very much a part of the decision-making process?
So one idea is to have kind of a rotation with core times when people coincide. You don't want to have only the employees choosing the 2 days they work from home, because then it tends to be Monday and Friday, and then you have overcrowding in the office Tuesday till Thursday. If you want to also reduce office space, for instance. So, and another issue is, especially for young workers, they want to learn from their seniors. They want to form these relationships, and for them, it's very important to also get FaceTime. So you can't really replicate that completely over Zoom. So the idea is to have some kind of rotation with core overlaps between people.
Karen, what will the workforce look like a year from now, especially in terms of pay?
Yeah, sure. So if the current trends continue, then we expect to see wages still running a little bit above their, say, longer term average. And I'm talking about the whole cohort. And by the way, there's many ways to look at wage data. If you look at it in terms of just nominal increases, so just dollars that you receive, not accounting for inflation, we're expecting that to continue to increase. But if you're thinking about real wages, which are actually those adjusted for what's going on with inflation, because inflation is running a little bit higher, that wage growth won't seem as positive. However, we're still expecting positive wage growth overall. And I think the bigger question is just who's benefiting the most from the wage growth, because what we've seen in the past is that the least well-paid have seen the slowest wage growth historically.
Chris, what do you see as the future for wage growth for women?
I see some positive trends which will receive a dent from the pandemic, because spending time out of work, you don't learn on the job, you miss out on that promotion, so that's going to put a dent in it. But women are in many of the fastest growing occupations, for instance, in social care. They're much more likely to go to university by now than men in most countries, and also the share studying science and mathematical degrees has been increasing. So I think there will be some wage growth driven through these aspects.
Karen, let me put a question to you from the audience. It says, what are your thoughts about companies collecting caregiver status data on employees and then reviewing pay and promotion data based on status?
Well, it seems to me that we ought to be taking into account that everybody is going to need some accommodations for what's going on in their life. So if you were only collecting care status data, you would be missing out on other ways in which perhaps, let's say, men have other obligations that aren't being captured. So I say that because I don't want to then stigmatize women as, oh, well, they have a lot of care obligations and therefore, we need to make these accommodations, and they start to be seen as though they're being coddled in the workforce. That's absolutely not the case. So I don't know if I actually think it's a great idea to only collect one aspect of data. I think we need to kind of think about caregiving as an obligation for, parents, regardless of their gender, and just assume that everybody is going to have caregiving obligations. I think if companies make it available to people, they will avail themselves of it. That's what we see in younger generations. When you offer them paternity leave, they take it. And so therefore, that's more of a balance between men and women. And I think that's where we want to get to.
I think so often when we're talking about women's work and work generally, we forget the importance of unpaid work, caregiving. Chris, can I put the same question to you? What are your thoughts about companies collecting caregiver status on employees and then reviewing pay and promotion data based on status?
So it's a tricky question, because when you're talking about hiring, then this data could also be used in bad ways. So I think there it's important for the government to level the playing field, to have the right policies in place that create rules for not only maternal but also paternal leave. And then if an employer is collecting this data, they're much less likely to want to use it to discriminate. And then, because it can be useful information, you can help people. You could offer them different type of contracts. But if you're not allowed to collect that data, then obviously you can't do that. So it's a tricky one.
Really tricky with the whole privacy question. Karen, another question from the audience. Are there any excellent examples of companies that are doing very progressive initiatives to make workplaces more equal?
Yeah, I mean, absolutely. What we're seeing is, I'll tell you right now, at LinkedIn, we're all as a company being given Friday off for just a well-being day because LinkedIn has recognized that people can get burnt out. And so everybody's getting a day off, so to speak. And I think a lot of companies are experimenting with ways to kind of provide a little bit more space for people to balance home life with work life. And so there are many, many examples of this, but I just wanted to call out LinkedIn for one, since I'm living it and we get this day off on Friday. But I think other ways that companies are starting to, experiment is to do something that Christopher was talking about, which is maybe job sharing, for example, where people may share a job and they have a little bit more control over their own schedule. So as opposed to you just being told what shift you have and it changes week to week, but you may know that you actually have a partner with a role, and therefore you can sort of be clear about what time you allocate to work, what time you allocate to home, and at the same time you're sharing with one partner. Sort of this job share approach, I think, has been really, really successful, especially for women.
And on that positive note, in our last couple of minutes, Chris, I want to ask you, what's one tool, tip, or resource that you'd recommend to women who are watching who might have struggled at work through the pandemic?
It relates to what Karen just said. So there's a new book by Claudia Goldin about the career and the family. And one of the main ideas is that we have these high-paying jobs that require ultra flexibility, and that this is where a lot of the gender gap is being created. But that we should think of ways of making these jobs, because maybe also the men don't want to work 70 hours a week and not see their children. So by making these jobs more flexible in a humane way, we could achieve more gender equality. And I think that book is a good because it also gives the overview of the whole history.
Awesome. Let's definitely hear it for the dads too. Karen, is there a tool, a tip, or a resource that you'd recommend?
Yeah, there's a lot of things that I'd recommend. One is we're seeing a lot of women actually strike it out on their own, sort of as founders and entrepreneurs. Women are kind of looking to kind of chart their own course. We saw a 27% increase in women-founded companies during the pandemic. And so I think, one way is for women to kind of also explore courageously going at, charting their own course. We actually have something called a service marketplace where you can go on and kind of find, do your freelance job and find possible connections for your business that'll make it easy for you to work. And so I think there's ways to kind of, for women to sort of think broadly. If your needs aren't being met in your current role, try something that you've always wanted to do that's different.
I love it. Thank you both so much for joining us, and to you for watching. It's really been a fascinating discussion, and I hope that you enjoy the rest of the Equality Summit. Thank you.
Hi, I'm Cynthia Coons. I cover healthcare at Bloomberg. I'm joined today by Rhonda Morris, Chief Human Resources Officer at Chevron, a company that's won awards for its approach to mental health and substance abuse in the workplace, and also Patrick Kennedy, a former congressman who founded the Kennedy Foundation. And in his work, he helps elevate the dialogue about mental health in corporations and on a national level to help raise awareness about mental health. And we're here today to talk about mental health in the workplace, and particularly how trends have evolved through COVID, which has been a trying time for workers in any industry, you name it. Everyone has faced it and dealt with it. And we're here to talk a little bit about how companies have been approaching this problem. And so, Rhonda, I wanted to start with you because you had told me that at Chevron, you survey your workforce and you try to take the pulse and see what's been going on. And I'm curious what you've been hearing lately as we're entering this new phase in the pandemic where maybe the most intense lockdowns have eased in many parts of the world, but sort of the chronic stress has accumulated and people are facing having to re-enter a life that they've left behind now for over a year. So I'm curious what you're hearing now and what you at Chevron and your group are trying to do to better support employees and let them know what you have available to them.
Well, thank you for the question. Now, we do survey our employees, and we have 40,000 employees in 55 countries, and every possible sort of incarnation of what people are dealing with, I think, exists in our organization. We have 65% of our employees who are working remotely, and the other 35% have never stopped going to his or her workplace. And those are employees on offshore platforms, in refineries, on ships, in terminals. And what we do to get sentiment from them is we survey them. We started surveying them even more frequently during the pandemic. We have what's called a Chevron employee survey, and we ask questions that are pretty far-reaching from how is your supervisor treating you? Do you feel valued at work? And we ask a lot of questions about health and well-being, and specifically mental health. And what we have noticed as we're entering this new phase is we have an issue and a problem that I think is pervasive throughout most companies, and that's people are tired and they're fatigued, and they're sharing sentiment with us about well-being. And based on what our employees share with us, that's how we cater our employee assistance program and the support that we provide them. We don't have a static program. The offerings that we share are really directly correlated to what feedback we get from the workforce.
Well, Patrick, in your work, you talk to companies in all different industries, and you sort of have a finger on the pulse of what's going on around the country. What would you say companies have gotten right throughout the pandemic, and what are some things they may not have gotten right and where there's still room for improvement in the corporate approach to mental health in the workplace?
Well, let's first acknowledge that we've gone through this real inflection point in the appreciation for how critical mental health is in the workplace because of, as you know, Rhonda, the turnover in employment just generally across the globe. I mean, most businesses are looking at almost up to 40% of their workforce want to change jobs. And the churn is a heavy price on companies. So they have to figure out, how do we hire new ones that are qualified, and how do we retain the ones we already have? And now mental health is not just kind of some side benefit EAP over here that's rarely kind of pushed out, unlike what Chevron does, where, you know, the incentive, in fact, in the EAP is not to have anyone know about it because the profit goes to those that don't spend it. So, you know, we need to just change up that whole paradigm, because now this is an existential crisis for corporate American businesses around the world, and that is, how do they keep the functioning business going forward? And it rests upon the stress level and the burnout level, the feeling of purpose in the place of employment, the feeling, as you point out, Rhonda, of connection with their managers, the feeling of community amongst their coworkers. And frankly, what do their benefits look like? Because if they have kids like mine who have had struggles, we had to bring in some teletherapy for our daughter. Like, if I didn't know somebody to make sure that got in network, I would have been sidelined as a parent. So a lot of the smarter, forward-thinking businesses are expanding their EAPs to the whole family. They're ensuring that there's in-network adequate care for not just employee, but their family. So there's just a lot happening. I'm very excited because as an advocate, we've been kind of pushing uphill to try to get adoption of mental health. You know, when I was in Congress, I wrote the Mental Health Parity and Addiction Equity Act, which basically said you had to include mental health and addiction in your benefits if you offered mental health, and they had to be on par with the rest of medical care. Now, in fact, insurance companies want to go even further because their employers, which are the corporations who they work for, are telling them, we want more mental health, because not only does it drive down the total cost of care, but it also has huge ripple effects on presenteeism, absenteeism, and disability costs. And as I said, the churn, which means that a business needs to emphasize to their third-party administrator that there's a greater fiduciary than at the stake of the insurer than they realize, because they don't see all the additional positives that come from them spending more on mental health in the healthcare part in terms of the rest of the workforce. But as fiduciaries at the business, you see the total impact of more mental health, which is not just reflected in lesser total medical costs, but actually in these other things that payers are not, incorporating into their metrics of their costs. So it's trying to align these incentives so that we get more for the employees, so that businesses are more productive overall.
Yeah, so what you're referring to there for people who may not follow this as closely is this concept of presenteeism and absenteeism and the knock-on effects in the workplace of people suffering with mental health conditions and not being able to get treatment. Rhonda, I'm curious how your EAP utilization has tracked throughout the pandemic in terms of your own workers turning to your employee assistance program as a source of help. Have they been doing that? Have they been reaching out? Has your EAP been able to accommodate the demand? Curious how that's sort of played out throughout this pandemic.
So I'll set some context first. We have had in-house EAP for 52 years, which is probably a surprise to many individuals. And they do a lot of metrics tracking. So I'll share two specific areas. One area they measure our individual employee outreach to our EAP counselors. And the other is supervisor or group / organization outreach for help for a group of for a work group. From an individual standpoint, we saw a fairly significant increase in outreach at the beginning of the pandemic, and we think that that's fairly normal. In fact, in both areas, the outreach went up over 100% at the beginning of the pandemic. Between 2020 and 2019, the percentage of supervisors who were reaching out to our EAP team on different ways and tools they could use to help manage the anxiety of a remote working workforce or a workforce of individuals who were continuing to go to the office, or even a group of rotators we have. These are people who are working on projects who have to constantly shift which locations they're in. They lean pretty heavily on our EAP team to provide them with outreach. And I believe the percentage increase from 2019 to 2020 was 145%. And we've also looked at it from 2020 to 2021, and it has leveled off dramatically as we move into this sort of vaccination environment. And we are I don't like the term new normal, but learning how we live with it, with all types of different uncertainties that are in front of us.
Yeah, these are different dimensions of stress. I think there were lockdowns and there was the acute stress of that, and now there's the reality for a lot of people that they may have children at home that are not vaccinated, but they're vaccinated. So it seems like the stress is shifting, not entirely going away, but hopefully heading in the right direction. Patrick, when you look at the amount that teletherapy has been utilized, and you mentioned being able to utilize it within your own family, that's really filled a gap here. Curious if you think that's here to stay, and if there are any risks to teletherapy being used in place of the sort of brick and mortar care that some people may need for more severe conditions. And are there any ways for companies to make sure people are getting the right kind of care for their specific problems?
Right. So you had all the right points in there, which is, yes, teletherapy is awesome. It's expanding, options to people who never otherwise would have been able to get care next Thursday at 10 a.m. across town when they didn't have transportation and they were working. I mean, thank God for telemental health now. It's really universalizing the ability for outreach. But two, we need to make sure that it is evidence-based. So we can't just have this free-for-all kind of Wild West of, quote, therapists who you're not quite sure if they're trained to best address your type of diagnosis. As you know, I'm the co-founder of PsychHub, and we're partnering with businesses around the world to curate therapy by diagnosis and the evidence-based treatment for that diagnosis. God forbid we not treat all of these as individual cases, because that's how we treat cancer. We use this personalized medicine approach. We should do the same in mental health, especially if we want better outcomes. And unfortunately, in the United States and I think around the world, we're not seeing the adherence to cognitive behavioral therapy as an evidence form of treatment widely applied, and we need to change that if we want to get the results that we need. And finally, there's no way to take for granted that teletherapy is going to virtual help is going to continue, because I hate to say it, but politics is politics. Unless people demand it, we won't have it continue. And I agree with you. The top priority here are kids, because while we have a dearth of adequate professionals in the mental health space to begin with, that particularly feels the worst when it comes to addressing the needs of our kids, which means we need all hands on deck wherever they may be. And I'm for taking on whatever association of therapists say that it's their purview who gets to treat patients in a given state. That if they do that, they will be impeding the welfare and benefits of those kids in that state if there's not enough therapists to provide that care. So I hope I see none of these associations, because there's plenty of business to go around erecting these false barriers to access to care, and we need a fight on that. That's not a given that we're going to win this. There's powerful lobbies within each of these states of trade groups in the mental health space that are going to hold on to, quote, their turf, frankly, at the expense of the broader need. We have to remind them there's going to be enough for everybody. We're only scratching the surface of those that currently need care, so let's not get into a turf war here. Let's join together and meet the bigger needs that our country has.
Definitely, yeah. So for those who didn't follow, part of that sort of development was during COVID, the federal government waived state licensing regulations allowing therapists to work with patients in other states, and that really corrected the supply-demand imbalance that we had seen prior to COVID. And so I think the thinking there is that the government needs to continue with that, correct, Patrick, in terms of keeping this supply adequately available to people all over the country?
Yeah, no, Cynthia, you've articulated a lot better than I did, but I think that the politics are, let's start with kids and let's make a win for kids. And then once we've done that, I think we've de-risked, well, okay, it's not the end of the world for these various professional groups in each state. We can expand it because the nation demands it. And then, you know, frankly, a lot of therapists like the virtual care. They can see patients in a way that best works with their time. And we need to make sure payers reimburse for teletherapy in a parity way, because we know it's just as effective, again, provided that it's evidence-based. So, and as I said, the ability to match, like a Match.com, for your therapy to be culturally competent, okay, so your therapist looks like you or has a similar LGBTQ background as you, or has a gender background that will allow you to be able to share about, you know, sexual trauma or women's issues. I mean, all of those things are crucial to the effectiveness of therapy, which you can't just get if you do looking at geolocation around my neighborhood in South Jersey. Like my child's therapy is actually better because I'm able to tap someone with that type of expertise from around the country. And don't we want that for all of our families?
That makes a lot of sense to me. Rhonda, have you ended up using at Chevron teletherapy as a way to help support more workers than you had previously? Have you expanded any of those offerings? I know you mentioned you had your in-house EAP, so I wondered what supplemented that with this increase in demand like you described.
Exactly what Patrick described is exactly how we dealt with the shortage of support, especially during COVID. Our team worked very, very closely with our current partners to source resources outside of California and Houston and all the states in the U.S. where we operated. And we recognize, again, there is a shortage of therapists, but at the same time, the relaxation of these regulations or rules really did help our employees get access to care when they needed it. If that had not happened, I don't think we would have been able to address as effectively the number of issues that were brought to our attention and the care that our employees needed. And especially even with the children. And I agree with what Patrick said about we've got to focus on children and their learning and their anxiety and their stress. And we did use a number of in-house resources to address that. And we use the external resources within the states where we operate, and we use telehealth outside. And we're probably, and one of the things we've been looking at is what do we continue doing? A number of the resources, because initially our focus was really on Chevron employees and their partners. And children had benefits that were available to them, but over time we recognize that we really need to do more for them. And even post-pandemic, we're going to continue focusing on support for the children of our employees.
So
yeah, Sharon,
we're coming up on time. Yes. Yeah.
So, a generation ago, businesses impressed upon the society that we needed to ramp up math and science. And so we got STEM education. And I think businesses need to ramp up their political pressure on our education system to emphasize social emotional learning and neuroliteracy and promoting coping mechanism development and problem solving skills, because businesses today are recognizing the absolute necessity of having a workforce that is able to navigate their own feelings and stresses and emotions in a way that is not counterproductive. And just like a generation ago, we had to strengthen our math and science, I think next generation, we need to strengthen our social emotional skills, which I think our businesses can now drive that advocacy. Just a little plug in there. Chevron's been a great champion for the cause, so thank you.
Thank you.
So if you, I'll throw this over to you, Rhonda, and then also Patrick, but what would be your advice, given some of the work you've done at Chevron and what you've seen throughout the pandemic, to a company trying to beef up their internal resources or even secure the kind of external resources that could be adequately utilized to help people really cope through these continuing uncertain times?
So I'll be quick. I recognize we're running out of time. I would say, number one, really listen to your employees. And there are a whole lot of different ways you can do that. I mentioned surveys earlier. We do a lot of town halls. We have lots of mechanisms for our employees to tell us what's really going on with them. So number one, I would say listen. And number two, we're a company, I believe, of creative problem solvers. There is no silver bullet that's going to solve mental health issues in America or even in the world. So we're going to keep trying things that work, and we're going to, and if they don't work, we're going to try things that are different. So don't look for the silver bullet, and listen to your workforce and adjust what you're doing accordingly as conditions change.
Yeah, and to that, I would only add that we need to educate the workforce to how to respond to their fellow coworkers who might be having difficulty, and how to get them the help they need, and how to support people who might be in long-term recovery to feel like they're working in a safe environment. And we need to get education for that through the workforce training, and include that in the diversity, inclusion, and education, and all the other mandated trainings that need to take place in a business. We need to make sure that there is competence amongst not only the managerial staff, but everybody, that they know how to be a, quote, first responder or an ally for someone suffering from a mental illness, or know how to talk about it so that they can get them the help that I love to hear that you're doing at Chevron and other companies are doing by expanding EAPs dramatically, and obviously also making sure that their insurers have adequate in-network benefits so their employees have timely access to care.
Well, thank you both so much for joining us today. We really appreciate it.
You're welcome. Thanks for having us.
Thank you so much. This is great.
Thank you all for joining us for the morning sessions of the Bloomberg Equality Summit. We hope you enjoyed these conversations. Thanks again to all of our speakers. And thank you to our presenting sponsors, Boston Consulting Group and P&G. Our supporting sponsor, RBC Capital Markets, and our community partner, UNCF, for making this virtual summit possible. If you'd like more information from our sponsors, please visit the Resources tab on your screen. Our program will continue at 12 noon Eastern Time. Please make sure you come back for the important conversations we have coming up.